Well, just to get started, again, this is the webinar for Alien Surplus Lines Insurers reporting in the 2023 TRIP data call. I'm Richard Ift from the Federal Insurance Office, and I am joined by Sherry Roulette and Annette Burris, also of the Federal Insurance Office at U.S. Treasury. Also on the line today are Mike McCauley of ISO, who is directing the aggregation of the data through the portal operated by ISO, as well as Aaron Brandenburg of the NAIC, which is coordinating the effort from the standpoint of the state insurance regulators. As we go along, if you have any questions, you can send them through the chat Q&A function. Go ahead and direct them to, you can send them to everyone if you want everyone to see them. If you want to remain anonymous, and we'll just respond as we see them, just direct them to myself, Sherry, and Annette, or any one of us, and we will pick them up as we go along, or we'll try to do that. We will do them all at the end, certainly, if we miss it as we go along. To get started, as many of you know, the data call is required under Section 104H1 of the Terrorism Risk Insurance Act. It is designed to provide Treasury with a data set that it will use to periodically analyze, among other things, the effectiveness of the program and the competitiveness of small insurers in the terrorism risk insurance marketplace. State regulators collect similar information for regulatory purposes with respect to insurers under their supervision. As has been the case for a number of years at this point, Treasury and state regulators are coordinating in this effort with a consolidated approach that will allow reporting insurers to provide the same data set to Treasury through the portal operated by ISO, and to state regulators through a portal operated by New York State. Insurers will thereby satisfy their obligations to both entities by submitting the same data to two different locations. And at this point, I was going to actually invite Aaron Brandenburg to jump in, and I know the reporting for Alien Surplus Lines Insurers is a little different. So do you want to, Aaron, do you want to speak to that for a minute?
Sure. As I'm assume most of the companies know, the NAIC does have the International Insurers Department, and they do require some annual filings. And one of those is designated a TRIA filing. And so on their website, under the Surplus Lines Working Group on the NAIC's website, there's links to those filings and instructions on how to file. So because that's a long-standing process through the IID with their filing, we do request that the Alien Surplus Lines Insurers submit that TRIA filing via that process.
Okay, thanks, Aaron. As you know, the regulatory due date for the annual data call is May 15th. This date was set in light of the Federal Insurance Office's statutory obligation to provide a report to Congress by June 30th. So please try to get your data in by May 15th. We're simply really not in a position to provide extensions for this reporting, given that we have a very tight window to get the information, get it aggregated in the form that we use it, and then generate the report that's due every year. As was the case has been the case in previous years, we are conducting webinars for each of the 4 reporting templates, which are small insurers, non-small insurers, alien surplus lines insurers, and captive insurers. This webinar will address alien surplus lines insurers, which for purposes of the data call, and as you know, do participate in TRIP by virtue of being listed on the NAIC's quarterly listing of authorized alien surplus lines insurers. The Alien Surplus Lines Insurer reporting template should only be used by alien surplus lines insurers that are not part of a group. unless the group consists only of alien surplus lines insurers. Any alien surplus line insurer that is part of a licensed domestic insurer group should report as part of the group using either the non-small or small insurer template, whichever is applicable. This webinar will only be addressing the requirements that are in the Alien Surplus Lines Insurer template. If you are affiliated with an Alien Surplus Lines insurer that is part of a group, we did hold separate webinars yesterday for the non-small and small insurers, and recordings of those webinars will be available on the TRIP website in the near future. This year's data call does not contain any material changes from last year's data call, which I'm sure you'll all be happy to hear. Although there has been some certain liberalization of reporting of some of the cyber insurance elements, which I will address when we get to that worksheet. There is also, of course, a new model loss question, which appears each year on the reinsurance worksheet. You will see that the model loss question uses a basically identical format to those from past years, but does apply a new location and new assumptions about the attack which we are seeking to model this year. A few more general comments about reporting before we move into looking at the individual templates. As I mentioned, TRIP operates on a group basis, so reporting should also be on a group basis. I also want to reemphasize how Alien Surplus Lines insurers will report, because there has been some confusion about this in the past in light of the requirements that Aaron just mentioned about reporting to the IID of the NAIC. Following conditions will apply for Alien Surplus Lines insurers in this 2023 TRIP data call. The insurer must do one of two things, following two things. First, the Alien Surplus Lines insurer is affiliated with a larger group. It should report on the relevant non-small or smaller insurer form. This form needs to be submitted separately to both ISO and the New York portal. Second, if the Alien Surplus Lines insurer is not affiliated with a larger group or is part of a group that only contains Alien Surplus Lines insurers, the Alien Surplus Lines insurer should use the Alien Surplus Lines insurer template instead. This form will be submitted to ISO and the New York portal. The submissions to ISO and the New York portal, again, are due on May 15th in both cases. And as Aaron mentioned, there is the separate reporting to IID, which I believe is done on an individual company basis as a group, as opposed to a group basis. And Aaron, I did get that right, didn't I?
Yeah, that's right.
Okay. And the process to start the data call is pretty straightforward. You will, and just so everybody know, you all should be seeing on your screens, Sherry's screen, which is actually on the TRIP, or the Treasury's Terrorism Risk Insurance Program website page, and specifically the annual data call page. And what we're going to do is go through resources that are on this page to sort of highlight how the reporting is supposed to go. First, you go to the data collection website, which is actually not this page, but there is a link to it, which is www.tripsection111data.com. Sherry, go ahead and click through to that. Oop. Seem to have lost your screen. There it is. Okay, when you click the link to the, and this is the, with the ISO portal, again, data collection is open at this point. To get started, what you do is go and pull up the registration form. You'll see there's a link, PDF link to it here. We don't need to go into it now, but go ahead and pull that form up, fill out the registration form, and email it to the address provided. The point of contact you list on your registration form will receive an email from ISO with a link to a secure portal, and that secure portal will contain your required reporting form. We do get quite a few questions from insurers saying they haven't received their reporting templates, so Obviously, in the first place, you won't get a reporting template unless you fill out the registration form. Once you do that, there is usually a little bit of a delay in terms of getting the forms out to you, but that does happen pretty quickly. Once you do the fill out the reporting form, you will send it back to ISO through the same secure portal. The form will be provided to you in Excel format. However, if you prefer to report using a CSV form of report, just notify ISO about that, and they will provide you with the specifications to submit your data in CSV format instead. Mike, could you go ahead and just let everybody know where things stand on your end from the data call this year?
Yeah, sure. Thanks, Richard. As it relates to Alien Surplus Lines Insurers, all registrations received through Tuesday have been processed, with the exception of 2 which are undergoing additional review at this point. So if you have registered through Tuesday, you should have received a secure message from Verisk containing your SFTP account credentials in order to access the data reporting templates. If you have not, or you're experiencing any technical difficulties, please feel free to let me know. The address on the site right now for TRIP Section 111 data at ISO.com is a primary resource, or my direct email, which Net provided in the chat feature. For any entities that recently registered, you can expect a communication within the next day or 2. And that will be the update, Richard. Thank you.
Great. Thank you, Mike. Again, remember that although this is a consolidated data call, you do need to separately submit your completed reporting form to both ISO as well as to the New York portal for state reporting purposes. Submitting your form to ISO will only fulfill your obligations under the Treasury data call. You do need to submit to New York as well for state reporting purposes. And again, there is that further reporting to IID that we've mentioned at this point. Data for excess workers' compensation policies will need to be reported in the same manner as all other data elements. As you may know, certain data elements for workers' compensation coverage provided by admitted companies is being reported separately to ISO by NCCI and certain workers' compensation rating bureaus. This is probably not going to be applicable to any companies reporting on the Alien Surplus Lines template. If you have any specific questions about this concerning your organization's particular situation, please contact Treasury or ISO. If you have any questions as you collect your data and complete the reporting forms, your first action should be to review the instructions for the Alien Surplus Lines Insurer form you will be completing. And Sherry, let's go back to the data page. And here it comes. Okay, yes, go ahead and click up the instructions for the Alien Surplus Lines form. As you see, these are available on Treasury's website. I believe they can be accessed otherwise through ISO if necessary, but you can certainly get them here. They contain both general and specific guidelines for each element, literally, of all of the, as you'll see, there's for each field of the data call, there's further information concerning what we are looking for there. So hopefully, if you do have any questions concerning what is being sought, hopefully you'll be able to figure that out. Going back to the main page again. As you see, there's also a sample fact patterns document, which is, you don't need to click through to it, but basically that's a document where we provide examples of how to report various data elements, particularly to the extent they may not be immediately intuitive. It's based on the non-small insurer form, so it's going to look a little different than the forms you get, but the principles set forth in there are basically the same. So it's there for those purposes. In addition, directly above that, on the geographic, there's also, for purposes of responding to the geographic exposures worksheet, there is a comprehensive zip code listing for all of the areas for which we seek information there. We'll get into that a little later, but basically, if you're in a position to pull the information by zip code, it might be more useful to you to use those zip code listings to collect that information. If you still have questions after reviewing the instructions, you can get help in response to a specific question by emailing tripsection111data@iso.com. In response to this email, you'll get either a written response, a call from ISO, or a call from Treasury. Alternatively, you can contact ISO or Treasury directly to ask questions, and I believe Annette and Sherry have put in contact information for the relevant folks in the chat function. Let's take a look there. Make sure we got all that. Yep. Okay. So yeah, that's all there if you need to reach out. At this point, we are going to walk through each individual worksheet within the Alien Surplus Lines Insurer template and provide explanations as to what we are seeking and some suggestions for completing the worksheet. If you have questions as I go through the worksheet, again, please type them into the Q&A chat box on your screen. If you direct them to us, again, they'll only appear to Treasury, although feel free to send them to everybody if you think everybody might want to take a look at it as well. Again, we'll address those as we go along, and certainly at the end of the remarks if we don't get to them. Again, once you submitted your registration to ISO, you'll be getting live Excel reporting templates from ISO through the portal. Those are specifically tailored for you for your particular jurisdictions and what have you. But for today's webinar, what we have up on our website are just PDF versions of that standard reporting form. We don't like to keep the Excel sheets up because ISO controls those for purposes of formatting and that sort of stuff. So and it's a little easier to actually walk through them in the PDF version. But again, just keep in mind that the individual sheets you receive, will be in Excel format and thus might appear just slightly different than the PDF version. The first spreadsheet, which is up on the screen at this point, is for insurer group affiliations. The purpose of this worksheet is to identify which entities you're reporting for. Again, reporting is done on a group basis unless, obviously, you are a single company. You should only be listing Alien Surplus Lines Insurers here. If you are attempting to list any admitted companies, you should be completing either the non-small or small insurer template instead. For tracking purposes, we ask you to provide the number that has been assigned to you by the IID of the NAIC for tracking purposes. You'll see that in column B. If you are an insurer that does not have such a number for whatever reason, ISO will assign you a number for tracking purposes. Having said that, if you have reported before and you've been assigned a number in connection with your prior reporting, please just go ahead and use the same number, company identification numbers that were assigned to you for prior years. In lines 4 and 5, and I'm up at columns G and H of this worksheet, you will need to report the group's total 2021 policyholder surplus. That's sought in column G, column H, or with the number in column H. That would be the same number that would be reported for state statutory reporting purposes, or how it would be reported, even if you're not otherwise required to report that. You also need to put in here your 2021 trip eligible lines premium, which you actually would have reported last year. And the reason we ask for this again is this is obviously relevant to figuring out what your program deductible for 2022 is, which again is the focus of this data call. And you will need it when you're responding to questions that appear on the reinsurance worksheet. If you reported a figure last year that you now believe to be an error based on further evaluation, please go ahead and enter the revised number this year. We have on these particular on the DEP the instructions for line 4 columns G and H. We've added some clarifications for this field for insurers that for whatever reason did not have any trip eligible lines DEP in 2021, which basically ends up resulting in insurers reporting on the reinsurance worksheet that they have a 0 deductible. That's not how trip works. You always have a deductible, and there are rules in the program for what happens in that situation where you're essentially a new insurer or a new insurer writing trip eligible lines coverage. And it basically calls for you to make estimates based on your 2022 amounts. So if you're in that somewhat unusual situation, which probably most of the folks on this call are not, please follow those instructions. Otherwise, again, we're just looking for your figures from 2021. Okay, moving forward to the next spreadsheet, which is premiums and policies and direct earned premium. Here you will be reporting your direct earned premium and policy count. We do ask Alien Surplus Lines insurers to report here using the line descriptions used for Solvency II purposes, even though TRIP is otherwise managed with reference to NAIC state reporting lines. You'll see that's in column C. We've tried to sort of reflect what the comparison points are for each of those. It's important to remember when you are reporting your premium here, although TRIP is defined in most part with reference to these NAIC state reporting lines, there are some significant differences, principally lines 1 and 2.1, which otherwise for Solvency II purposes fall into the fire and other damage to property line. At least for state purposes here, that can include both commercial and personal lines coverage, but only the commercial portion of this coverage falls within TRIP. So you should not be reporting any personal lines premium in any of these fields, in this one or any other one when reporting. Similarly, professional liability and errors and omission coverage, excluding D&O, which you might consider within that category. D&O is included. However, professional liability and E&O generally is not included, even though it would otherwise fall within NAIC line 17, other liability, which is part of general liability within the Solvency II line. So again, you need to strip any of that premium out of your reporting. Please don't report that here. Long story short, there may be some amounts that you report for Solvency II purposes, but you would not do so here. The instructions do identify the difference between TRIP eligible lines and NAIC state reporting lines, so you can ensure that you are actually reporting your TRIP eligible premium. Going through the columns, column D, your total 2022 TRIP eligible lines DEP will auto-populate based upon the forms that are in the worksheets you'll get, and that basically will be the sum of columns E, F, and G, which break down your policies based on whether terrorism risk coverage was declined, provided for no cost, or provided for a premium. If you provided a number in column G, where terrorism risk coverage is provided for a certain amount of premium, then column H should contain the actual amount that was charged for the terrorism risk premium, and thus column H will be a subset of column G, which will show the policy's overall premium. Premium should be entered on a direct earned basis for calendar year 2022. This, of course, means that if you have a policy that started before 2022 or ended after 2022, you should only include the premium earned during 2022 for that policy. If a policy covers multiple states, the premium should be allocated to each state proportionally in the same manner that you report for state purposes. Policy count, which is the columns to the right of the premium columns, will be entered in columns I through J, and as with premium, you will divide the policies based on whether terrorism risk coverage was declined, included for no cost, or included for some amount of premium. Again, these amounts will automatically add up and appear in column L. Keep in mind that your policy count will be calculated differently than the premium. Essentially, a policy should be counted here if it incepted at any time in 2022, or if it incepted before 2022, but remained in effect on December 31, 2022. So as an example, if you had a policy that started on January 1, 2020 and ended on December 31, 2022, you would include the policy in your policy count. Similarly, if you had a policy that began on July 1, 2021 and ended on December 31, 2022, you would include that. However, if your policy began on July 1, 2021, but expired on June 30th, 2022, the policy should not be included in the policy count because the policy neither incepted in 2022 nor was it in effect on December 31, 2022. So while that policy would generate some earned premium to be reported in columns, the premium columns, you would not report that policy count in the policy count numbers. I want to highlight that if any of you have policies that cover multiple lines of insurance, you will end up with double counting for policies because you should be counting the policy one time for each line of insurance where it appears. So let's say if you had a policy that provided coverage for both fire and for general liability, lines rows 10 and 11 of this form, you would record a policy count of 1 in both rows 10 and 11, even though it's a single policy. So you would see that if you add these numbers, then vertically, you'll get double counting the policy because the policy count, for that specific line should still be accurate. Basically, to give us an idea of how much of this is going on, you will then enter the total policy count in row 14 down at the bottom. So that allows us to determine how many actual number of policies were issued versus just by individual lines. And again, for reporting on different state worksheets, you would do that separately for each state as well. The next spreadsheet, you can go down to the next one, is for the standalone terrorism policies you have, which cover terrorism. This is going to cover policies that offer coverage only for terrorism risk. Other policies that, are only include terrorism as part of the amounts being insured would be included on the prior list, but would not be included here. This is just for terrorism only policies. For comparative purposes, you'll see we do ask here for information on policies that provide coverage for acts of terrorism certified under TRIA, TRIP, line 4, as well as policies that provide coverage for other acts of terrorism that are not subject to TRIP. Again, we're doing this for comparative purposes. This data is reported on a nationwide basis, not on an individual state basis. So, and in addition to the DEP figures, you also need to include number of policies. Note that on this particular worksheet, any premium you have in here should also be entered, at least for the TRIP eligible portion of it. It should be entered into the prior worksheet as well in the right fields So that all goes into your total premium, deductibles, what have you. But again, here is just put in here the amounts associated with the standalone. Okay, moving down to the next sheet is, and yeah, let's get that entered. Okay. This next is the worksheet for cyber risk. Although there were a number of expanded areas of inquiry introduced for the first time in the 2022 data call, categories have not changed for this year, except in connection with the liberalization of certain reporting requirements. As in prior years, we are continuing to seek information on both standalone cyber policies, that's to be entered in column C, as well as cyber endorsements attached to another policy or so-called package policies, and that would be entered in column D. To the extent you report similar information in state insurance data calls, you should essentially report that in the same way you report to state regulators. We're essentially looking for the same description of policy. You should not provide any information here on non-affirmative or so-called silent cyber coverage, assuming that is still something that's an issue for you. And that's, of course, where a policy might can cover some sort of cyber loss because cyber is not specifically excluded in the policy. Here, we're looking for reporting on policies that are expressly affirmatively providing cyber coverage. Lines 3 through 6, 8 through 9, and 18 to 19 request information concerning premium, number of policies, and limits for cyber policies in the TRIP eligible lines of insurance. That has been requested previously and, well, even before 2022, and of course we're continuing to request that. Again, those should be responded to as they have been responded to in the past. Lines, and again, I'm highlighting these were put in place last year, but I'm highlighting them again as still this is the only second year they've appeared. Lines 7, 10, and 20 request the same information concerning premium, number of policies, and limits, this time as applied to cyber policies written in non-TRIP eligible lines of insurance. While the information is the same as the sort of information we have requested in the past, we have expanded it to policies written in non-TRIP eligible lines so we can assess the amount of cyber insurance that is currently not subject to the program. Our understanding is that this will largely be cyber insurance that is currently being coded, characterized, and otherwise reported for state purposes as professional liability insurance, which is subject to an exclusion under TRIA. Again, if you have policies that fall into this category, that you view them as professional liability policies that would not be subject to TRIP, if you write them, the questions should be answered in the same way as you would respond to the questions for policies that are written in the TRIP eligible line. Last year, for the first time, we began requesting certain categories of information never before requested involving, and again, lines 12 to 17, premium and number of policies allocated by size of policyholder, measured last year solely by the number of employees of the policyholder. Lines 21 to 24, limits specific to the cyber extortion and ransom payment coverage provided by the policy. And in lines 25 to 30, loss information specific to cyber extortion and ransom payments. If you participated in the 2022 data call, you may recall that we did provide certain special general instructions concerning these categories, which in some cases reflected that we would be taking a, I'll say, liberal approach on the collection for those insurers who may not have collected certain of those elements in the past. Given that we are now in the second year of this collection, that special instruction has been deleted, and we do expect complete reporting in all of the categories for insurers that write cyber insurance. For one of these categories, however, and sure, go ahead and go back up, Sherry, to lines 12 to The questions on policies, on amounts as allocated by size of policyholder, we have provided further options for reporting. Last year, we requested that you make this allocation based upon the number of employees of the policyholder, which we identified in certain ranges for small, medium, and large policyholders. This year, based upon certain comments we have received and engagement we conducted, we are also allowing insurers to use revenue categories, which again are specified in both the forms and instructions, and just sort of point that out here. So a small policyholder is 100 or fewer employees or less than 10 million in revenue. Similarly, medium, 101 to 500 employees or 10 million to 100 million in revenue. And finally, large policyholders, 501 or more employees or more than 100 million in revenue. So if it's easier, obviously you can pick either one of those to do this reporting. Note that this is an either or election you must make. You cannot use one measure for some policyholders and the other measure for other policyholders, since we need to track that to make sure that the information is still, at least in the aggregate, is tracking correctly. Mike, can you address briefly for the group just how this is being accomplished?
Yeah, sure. Yeah, so as Richard mentioned, it's the either or. So in order to capture the information as to whether you're reporting by the number of employees or revenue, to kind of simplify the reporting process, this is going to be identified by, we've added a parameter to the file naming convention for your cyber workbook. So you're going to see a Z contained in your workbook name. So depending upon if you're reporting by number of employees or revenue, basically you're going to be replacing the Z with either the E for number of employees or R for revenue. The instructions are contained in the email response you received to your registration, as well as to your SFTP, or as well as included in your SFTP instructions that were also attached to that email. Yeah, and then that's the way in which we're going to identify and capture the information.
Okay, thank you, Mike. In addition, again, no other changes. We have added certain clarifications in the instructions specifying what fields should reconcile with other fields. Again, this isn't a change to anything we've been doing, and the figures of most insurers reconciled correctly last year. However, just to make sure we have specified what should add up to what, we have made some changes there. And Sherry, if you go to, yes, line C, for example, line C12 to E12, yeah, basically it'll show you what cells should add up to other cells to make sure that the reporting is being done correctly. So, okay, you can go ahead and go back to the form. There are no changes to the questions concerning limits specific to cyber extortion and ransom payments. As we explained last year, the distinction we are drawing is between coverage for cyber extortion generally, which obviously can obtain policy benefits apart from payment or reimbursement of an actual ransom payment, versus limits for the actual ransom payment. To the extent there is no distinction here, i.e. the same general limit applies to both, then report the same limit. What we are trying to get at here, of course, is if there is a different limit for cyber extortion generally versus the actual ransom payment. And again, the information on this is being requested separately as between policies in TRIP versus non-TRIP eligible lines. Finally, the last category, loss information specific to cyber extortion and ransom payments, is requested for all cyber policies combined, whether in the TRIP eligible lines or not. The questions seek paid and incurred amounts for cyber extortion generally, and paid amounts for ransom payments, along with the number of claims such ransom payments are associated with. Finally, direct defense amounts for cyber extortion generally, without any effort to segregate that as to ransom payments specifically, are sought, and again, on a paid and incurred basis. That's sort of all I have to say about the cyber worksheet. We can respond to further questions through the chat function if necessary. And obviously, if you have any specific questions as to your specific situation that you'd like to reach out separately to us, you're free to do that. Okay, moving to the next worksheet, which is exposure bases by jurisdictions. Next, you will report your exposures on a jurisdictional basis. As with reporting DEP, you will provide data. We're allowing you to report that data based on the Solvency II reporting lines. You are also asked to identify exposures where terrorism coverage was provided or not. The purpose here is to calculate the total potential exposure under the policies. In other words, the most you might have to pay under the policy in question. The worksheet asks you to specifically identify policy limits where nuclear, biological, chemical, or radiological, or NBCR or CBRN risks, depending your acronym preference, are not excluded. This is requested for both property and liability exposures. So you'll see in column D, you will providing policy limits of property policies where terrorism risk insurance is provided. Then in column E, you will look at the same universe of policies and report policy limits for only those policies where NBCR coverage is not excluded from the policy. If there are NBCR sublimits in place, these should be reflected accordingly in the exposure reported in column E. So column E should be a subset of the figure identified in column D. The same reporting methodology is used in columns I and J, further down the worksheet, to report limits of liability. Also, just to clarify, if a policy provides terrorism risk coverage for any type of NBCR exposure, even if others are excluded, then we're asking you to identify this policy exposure as not excluding NBCR coverage. So in other words, if a policy only explicitly excludes nuclear risks, but would cover chemical or radiological risks, then you should be recording the policy information in columns E and J, respectively. In addition, if a policy, and that's probably may not be relevant for this group, but if a policy only provides NBCR coverage as a result of fire following laws, which apply in some U.S. jurisdictions, although I think that's on an admitted carrier basis, you should not include that in your calculation. So anyway, we're asking you to basically respond based upon what the policy provision in your contracts say. We are also requesting information on policyholder deductibles or self-insured retentions. Again, no change in the reporting from prior years. These should be reported, however, in connection with primary level policies that reference, or primary or first level policies that reference a policyholder deductible or self-insured retention obligation. You should not report these obligations in connection with high-level excess or umbrella policies, because that essentially would result in double counting that obligation. Presumably the company that has the primary level coverage should be reporting it. We don't want other carriers up a particular tower reporting the same information. If a policy contains multiple deductibles or self-insured retentions within the same jurisdiction, i.e. depending upon the property, location, or type of operation, you will use the lowest deductible or self-insured retention within that state. You would use the same logic when filling out the exposure worksheet for the United States as a whole, and use the overall lowest deductible or self-insured retention for your policy. I also want to review some of the differences in how exposure information should be reported as compared to premium. First of all, you want to report your exposure information on a per occurrence basis. Next, whereas you would divide premium information proportionally by jurisdiction with exposure, please report the relevant limit for each jurisdiction, even if an aggregate limit might cap your exposure across multiple jurisdictions. For example, if you had one policy providing $1 million of coverage in 2 states, let's say California and Oregon, you should report $1 million of exposure on each of the California and Oregon worksheets, even though that policy had a single overall limit of $1 million. You also need to fill out a U.S. worksheet in connection with this workbook, which aggregates all of your policies together. So in this example, on the U.S. worksheet, you would provide the overall policy limit and take into account any limits that might apply across multiple jurisdictions. Again, in the example I just gave, $1 million would be overall U.S. exposure because it is a single policy providing $1 million in coverage. Again, as a reminder, if the policy has a single occurrence limit, please use that single occurrence limit. If there is no single occurrence limit, use the policy's aggregate limit. Another difference between the DEP spreadsheet and this exposure spreadsheet is that you should be calculating exposure based upon policies that were in force on December 31, 2022. This differs from the premium worksheet, which asks you to include all premium earned in 2022, even if a policy expired before December 2031. So again, on the exposure worksheet only, if a policy terminated before December 31, 2022, you should not include that policy in your calculation. So you can basically take a snapshot of what you have in place on last day of the year in 2022 and report based upon that. Once again, rating bureaus will provide payroll information for workers' comp if that happens to be applicable to you, but they do not apply any information on excess workers' compensation, which, as you'll see, is called for in line 7, and that may well be applicable to you. Let's go to the next worksheet. And this one is policyholder industry code. And again, this is a nationwide worksheet. On this worksheet, you will categorize the premium for your policies using your choice of NAICS or SIC codes. You will be providing data for both property and liability policies, and once again, dividing this based upon whether coverage was provided or not. You will see there is an unavailable option listed under both NAICS and SIC options. This isn't an option to report everything in this field, but we do recognize that some data can't be reasonably captured with this level of detail due to changes in management systems and the like. Once again, note that excess workers' compensation would need to be reported on this sheet, even if you have workers' comp generally that would be reported by the rating bureau. Okay, moving down to the next worksheet. And this is the places of worship worksheet. This again is on a nationwide basis. This form collects data on the availability and affordability of terrorism risk insurance for places of worship. The worksheet has not changed from prior years. It requests that data reported on a nationwide basis and categorized by property, liability, and workers' compensation policies. I mean, here we only want information on policies written for places of worship. When you are reporting this data, please do your best only to report coverage related to actual houses of worship and exclude any affiliated religious organizations such as hospitals or schools. You have the option to provide your data using one of 3 sets of industry codes: NAICS codes, SIC codes, or ISO class codes. And again, the numbers reflected for each of those, the particular code numbers, are tracked to what we believe is the best approximation of what the coverage would be for places of worship. So if you can report your information using one of these classification systems, please do so. If you can't, but have another way to extract the data, such as a policyholder name search, please do that instead, and that would be reported in the other category. You will see that there is no category here for unavailable or unknown. This is an express congressional request, so we do need carriers to identify as best as they can all information or all coverage that they write for places of worship. So please find a way to report actual or estimated information for your insureds within this class of policyholders. Next worksheet is the geographic exposures worksheet. You can view this sheet as requesting the same sort of information that AM Best asked for on its terrorism questionnaire. The geographic descriptions are the same as those used by AM Best. In addition to, and you'll see that those appear in column C. As you'll see, some of the descriptions are literally all zip codes within the 4 counties of Cook. For example, Chicago, all zip codes within Cook, DuPage, Lake, and I can't even see that. Basically, the spreadsheet, the Excel spreadsheet that's located on our webpage actually lays out the zip codes for each of these areas. So if you're in a position to use zip codes to respond to this, you can use that in its Excel format so you can manipulate it, and that hopefully will help in your reporting. Otherwise, use your best approximation of these geographic areas. Again, the worksheet does ask for data on any workers' compensation policies you provide, and that would need to be reported separately by you, even if rating bureaus report direct workers or primary level workers' comp for you. On the next page, go ahead and go down. You'll see that, actually keep one more page down. Those are all the different areas. Okay, on this page, we were asking about aggregations within specific zip codes to see which zip codes in the US have the highest rates of aggregation. So here we would ask you to add up all exposures in the zip codes and provide your top 5 zip codes in order. You'll see we ask you to do this twice. The first set is for the defined geographic areas listed above, and the second set is for all areas outside of the defined region. In contrast, and going down to lines 49 and 50, those ask for your highest single exposure at a location. Here you would be focusing on one particular location and providing the exposure amount and the zip code of that location, as opposed to the previous set of questions where you were providing an accumulation of all locations in a particular zip code. Okay, last but not least, going down to the next form, which is the reinsurance worksheet. You will need to answer these questions for your private third-party reinsurance protection. You should not include any intra-company arrangements that you may have in place. We are only interested in here on third-party reinsurance arrangements. We strongly recommend that if you have an individual responsible for reinsurance in your company, you should forward this worksheet to them for completion. This will help ensure the accuracy of the data we receive. In addition, when responding to this worksheet, we need you to enter actual figures in column C. We understand that in a complex reinsurance program, it may be difficult to provide a single answer. And folks in the past have basically put in their C attached chart or C the explanations. We need you to put in your best estimate of a figure there, or the most likely figure for what your total treaty reinsurance coverage would be. So please do your best to do that. Otherwise, if you provide some sort of reference to some other information, it runs the risk of not being aggregated. If you have any questions about the completion of this, again, please direct them to either Treasury or ISO. One data field I wanted to highlight here is the request for reinsurance purchases for natural catastrophe loss, and those are at line 8 through 10. We do occasionally receive questions about the relevance of this question, so I wanted to point it out and note we ask you to provide it. It's essentially for comparative purposes, so we can see the availability of reinsurance for terrorism versus what you otherwise are able to get for natural catastrophe. You will see that there is a question as well about any additional terrorism exclusions that apply to your reinsurance contracts, separate from domestic and foreign exclusions listed in lines 12 to 13. This appears in line 26 and is meant to capture situations that exclude risks at particular locations or within certain metropolitan areas. Okay, going to the next page, the model loss question. I'm going to end the overview with a summary of the scenario. This year's hypothetical loss scenario focuses on a location in downtown Las Vegas, Nevada. The scenario involves a single truck bomb blast at a street location, and you'll see GPS coordinates are provided in the scenario description to help you model the potential loss. We want you to determine the losses you would experience under your policies, if any, associated with this scenario. So we don't want you to provide losses or don't enter information for, what your modeling program you use might show for the whole event. We're just looking for the amount of loss that would be within the scope of your policies. As we're only asking for your losses, you only need to provide data if one or more of your policies would be exposed to loss arising from this scenario. If you don't have any policyholders who would be affected, you should enter zeros in each field. The total loss should appear in line 30 and will fill in automatically. So after you enter data in the subsequent lines, you can verify that the math adds up correctly to show the total insured loss. The next 6 lines divide this total loss between various components. And then specifically line 31 asks for policyholder deductibles or retentions that would apply to the loss. Here only include amounts that are indicated as payable by your policyholders as a precondition to payments under the policy. If you are at excess levels above other insurers on a policy and your payment obligations are triggered because the underlying coverage is exhausted, then the amount you should enter here would be 0 because that loss would be considered as part of the underlying coverage rather than your own. Line 32 asks for your net trip deductible, which will be calculated as your trip deductible minus any recovery you would have for private reinsurance within the deductible layer. Line 33 asks for the amount you would recover under private reinsurance within the deductible layer. The rest of the lines move into amounts above the deductible within the within the copay layer and what you might be able to recover from the government. Line 34 asks for your claim under TRIP. The federal share in 2022 is 80% of insured losses, so you would get that number by taking your total loss figure, subtracting what policyholders pay, subtract your TRIP deductible, both the net and reinsured amounts, and then multiply that resulting figure by 80%. That methodology is actually walked through with an example in the sample response document that we highlighted at the beginning. So that would be a good place to look for how it's supposed to work. Line 35 then asks for your net loss in the copay layer. Again, companies are responsible for the other 20% of losses above their deductibles, the so-called copay. So you would again take your total loss figure, subtract your policyholder deductible, SAR, and your trip deductible, and then multiply this number by 20%. After that, subtract off any private reinsurance you have for the copay layer because this would not be part of your net loss. And last but not least, line 36, you will be listing any private reinsurance recovery within the copay layer. All these lines add up together. It should come up with a number equals the total projected loss associated with your policies at the location. Two additional points of clarification. You'll see the scenario includes numbers, estimated numbers for employee injuries, but does not require you to estimate any potential liability exposures. Accordingly, only property insurance and workers' compensation payments should be estimated when you're answering the model loss question. And that's all I have for the general overview of the forms. Do we have any questions? I am not seeing any questions in the chat. We can stay on for, if anybody has anything, we can stay on for a minute or so, but well, given that, oh, there is a question. The question is, what constitutes a group? Or companies simply owned by the same parent company considered a group? Complicated question. There's actually, TRIP is based upon affiliations, which there's both statutory and regulatory provisions concerning it. Generally speaking, if your group is basically all companies under sort of joint single ownership, you should consider yourself, though, part of a group. I think it even goes down to, if you're part of a group that you know, the ownership is only 25%, I think that's technically part of the same group. Having said that, for data call purposes, I mean, you know, we're not, the amount, group is sort of more important if the program was actually triggered. For data call purposes, I mean, use what you would normally consider to be part of the group in terms of your ownership structure. Any other questions? All right. Well, I thank everybody for coming and